Hello, it's Dylan Simon with the Simon Anderson team here in Seattle with our July 2026 apartment market update.
I'm JD Fuller. Together, Dylan and I specialize in selling 50 unit to 200 unit apartment buildings and apartment development land throughout the Puget Sound.
Last month, we covered the supply side of the rent growth equation. New apartment deliveries are tapering fast in our region. This month, we turn to the demand side, and it's all about jobs.
Through the first half of 2026, tenants leased 4.6 million square feet of office space throughout the Puget Sound, with leasing accelerating each quarter.
The second quarter alone posted over 2.5 million square feet of office absorption across the region, the strongest since 2019. And the first time since then, we've seen back-to-back quarters of over 2 million square feet of office absorption in the region.
This isn't one tenant propping up the numbers. OpenAI took nearly 250,000 square feet in downtown Bellevue, while Uber and Databricks combined for over 325,000 square feet at the new 4106 tower.
Just last week, Anthropic signed an over 100,000 square foot lease in South Lake Union. Defense tech giant Anduril doubled its footprint in the region and is already hunting for more space in downtown Seattle.
Even early stage companies are landing here. Trace, an AI startup fresh off a $107 million seed round, is searching for 100-person office space in our market right now.
Bellevue grabs the headlines, and for good reasons. Tenants leased over 6% of the total inventory of downtown Bellevue office buildings in just the last 6 months.
But don't sleep on Seattle. Downtown Seattle actually led the region in total square footage leased with over 1.7 million square feet, nearly double Bellevue's total.
And the recovery is not confined to just one submarket. It's happening on both sides of the lake. And that's exactly what a durable jobs recovery looks like for our region.
What makes this cycle different is where the demand is coming from. Over 70% of AI leases signed since 2022 are companies headquartered outside our region, mostly from California. That is net new demand.
And these jobs punch well above their weight. Economists estimate for every new tech job, demand is for another 3 to 4 local jobs: doctors, teachers, baristas, and trainers who serve these workers.
So when OpenAI fills 250,000 square feet, the ripple effect is thousands of new households across the region. Most of those are renters.
And here's why apartment owners should care about these trends. Every office lease is a hiring plan, and every new hire is a new renter. Office leasing today is a leading indicator of apartment rent growth tomorrow.
Remember the supply line from last month. New deliveries are falling off a cliff just as job growth returns. Shrinking supply colliding with rising demand is the exact setup that produced our last great rent run.
We've watched this exact sequence play out in the San Francisco Bay Area that we've talked about for many months. And what that's leading to is 10% year over year apartment rent growth in that region, directly following all of their office absorption.
Both sides of the equation are pointing in the same direction now. The window to get ahead of this trend is right now before it shows up in the sale comps.
If you're considering a sale or simply want to know your building's value in a rising market, give us a call for evaluation of your building or your portfolio. Thank you very much and look forward to seeing you next month.